ETF fans, this is Alex Shepard with ETF Action. Today is the 26th of August 2024, and for today's daily video we wanted to talk about tax loss harvesting. Some of the clients here at ETF Action have started talking about harvesting losses. We're not quite at Q4 yet, but it is fast approaching. So I wanted to take a look at what areas there might be opportunity in taking some losses currently from where we're at the year and over the last year. So to do that, we're going to take a look at the categories within the ETF Action home office. So with that, we are now looking at the ETF Action site. And what I'm going to do is navigate down to the home office. A lot of tools, things going on in here, but categories. These are the ETF Action categories. We do it for all ETFs, mutual funds, and you can look at ETFs only, mutual funds only, or all funds. And right now, we are looking at just an overview tab for all categories. So ETFs only, for example, the largest category is Equity US Large Cap Blend. It has 290 ETFs in it. Average lifespan of those funds, 6.15 years. $2.8 trillion, average or simple average expense ratio, 43 bips. And then we've got a number of other statistics here. If you want to look across this versus any data point, just as if you were looking at an ETF in our system, you can look at the fundamentals or the exposure composition, risk, performance, flows, what have you. So today, what we're interested in is finding opportunities where there might be losses. Markets have done very well. However, when most things go up, there's also an area of the marketplace that probably has gone down. So to do that, I'm going to change our columns here. So I want to keep some of these things. I don't think I need asset class in here, so I'm going to get rid of that. Monthly reports, I don't need that in our view for today, but we do publish these monthly, a data pack and a PDF that looks at every category. I'll get rid of those. Key stats, not interested in our liquidity today, premiums or discounts or yields, expense ratios, nope. Just want to see our assets, quite frankly. And then in addition to that, we want to add a couple more tabs. Percentage from the 52-week high, I'd like to see that in here. We also want to see performance, so we're going to add performance. We'll do 3-month, 6-month, throw in year to date, and 1 year, I suppose. And one last place is fund flows. So we'll do year to date flows, 3-month flows, and we'll throw in 1 year. So just to give you an idea of what we are now looking at is US Large Cap Blend, just like before, 290 ETFs, $2.8 trillion in assets. You can see it's taken in $81 billion over the last 3 months. Year to date, $162 billion. Over the last year, $303 billion in net inflows. No market performance adjusted there, strictly net inflows versus net outflows. From a performance perspective, like we said, it's been a good year. A lot of green on our screen here in terms of performance. If you look over the last year, leading category, cryptocurrency, whereas on the flip side, US mid-cap growth. But if I keep scrolling down, there are some negative categories over the last year. What are we looking at? We have non-traditional interest rate volatility, commodity multi-sector, equity thematic, sustainability, energy commodities, industrial metals commodities. So commodities, by and large, categories have made up over the last 12 months a number of the negative areas of the marketplace. Now, if I want to just look at this year, let's take a look. We'll sort by year to date. And we've got negatives at the top. Similarly, you're going to have a number of the commodities. We've got carbon credits in there. Latin America, year to date, on average, down 8%. Only 3 ETFs in that category. Agriculture, natural resources, that's $28 billion category. That's not small. It's got 55 funds in it. And there are losses in there year to date. So what we can do, and also more importantly, we have 52-week high, percentage off 52-week high. So you can see there's a number of categories that are touching 52-week highs, or they haven't been around long enough to hit a 52-week high because they don't have the track record, because you can see a lot of these categories have one fund in it, not surprisingly. But then you can start going down this list and see, markets may have been doing well, but the average investor out there continues to add to their position typically on a regular basis. They don't just put the whole chunk in at once. If you're averaging in particular in a taxable account, this is where you're going to want to start paying attention. Is sure, we can look down this list and see there's a number of categories that are up and they have green performance year to date. But if you're averaging in on a monthly basis, you're going to be able to take losses from specific tax lots. Now, just keep in mind, I'm not a tax advisor, I'm not an attorney, so anything I'm going through today, you're going to want to review that with your financial professional or a tax accountant. But point being is if you've continued to average into positions over the last year, there's a lot of categories that you probably have tax lots that are at losses right now. And if you're working within a taxable account, you're going to be able to take losses on that. So with that being said, I'll take a look here. I'm looking at percentage off 52-week high. We'll look at the energy sector. It's nearly 10% off of its high on average, right? So if I click into here, there's 29 ETFs. It's going to take me from the categories over to our ETF database. And we're going to look at all the ETFs that make up this category. Not surprisingly, the Select Sector Spider XLE is the largest with $36 billion in the category. If I want to look at performance of all of these funds, sure, they're all energy, but they're not all going to be exact. If I look over the last year, we've had a lot of green, but again, a number of areas where you've had losses. And again, if you want to look at the technical indicator, percentage off the 52-week high, I can see here that there's a number of funds that if I'm investing in energy, if I know that I have a position in an energy ETF that may have been an overlay or an additional position over my broad-based exposure from my broad US exposure, then there's an opportunity to take a loss and swap it out here. More so, we're looking at the ETF, and the ETF performance is just a makeup of its underlying holdings. So if you have a number of individual stocks or securities within your portfolio, you might want to take a look at some of your energy holdings, because if you've continued to average into a model with a number of individual positions, especially in stocks, then there might be an opportunity to harvest some of those losses if you're, again, working within a taxable account. Just to give you an idea, I can pull up, we'll go into XLE, the largest one out there. Here we are, XLE. Now I'm taking a look at XLE, but we can go into the holdings in the portfolio visualizer here. So we've gone from the category level down to the ETF level, and now we are looking at the underlying securities in XLE. So if I were to look at the 22 stocks that make up this portfolio, you can see some largest ones: Exxon, Chevron, and a number of other companies in here. Not a bad day. This is as of the close yesterday, one-day performance. But if I wanted to look at percentage off 52-week highs, there's a lot of opportunity in here. And especially, I can look at it down here in the table to see what these companies have been doing. And same idea is you're going to be able to take a look at exactly what's been going on with the portfolio and possible areas to take losses. With that, I'm going to stop for today. If you have any questions, reach out to team@etfaction.com. But just wanted to start getting you to think about heading into the end of the year. There are places to take losses probably, or harvest losses from a tax perspective, although markets have done very well over the last year. So again, talk to a financial professional or a tax accountant before you make any investment decisions. And thanks for tuning in. We will talk to you tomorrow.